Tom Lee. That certainly has been a winning trade for him. He's been bearish, and he's up double digits this year, Einhorn, on the simple idea of don't fight the Fed. But you still disagree with that, don't you?
Well, I mean, I think David's been right. It's been tough to fight the Fed. And, you know, we've had a real tough time with our calls this year. But I think as we get into October, I don't think investors are fighting the Fed if they think stocks have upside from here. I think that's one of the big changes. And, you know, some of it has to do with that some of the tail risks are coming off, like what happened in the UK. Part of it is that earnings delivery has actually been quite good. So, you know, a bear thesis this year was that earnings were going to get crushed, and that still is going to be weakening, but the delivered earnings have been really good. And I think from a inflation perspective, I do think the Fed, you know, hasn't seen any effects. I think that's what we're hearing as a consistent message. But I think a couple of things have definitely changed when you really listen to what they're saying. You know, the first is I think increasingly they are pointing to supply chains and commodities as really driving CPI, less attributable to labor markets. And that's an important distinction because that means the Fed can actually also get some help from the supply side easing. And I think we're seeing a lot of data, whether it's housing or used cars, that are really supporting that there's a payback coming where even though CPI still looks pretty strong, I think the Fed would be happy to see any type of weakening in inflation, and I think that's coming. So I just think the odds are very good for investors.
I don't know. I mean, those that have thought that inflation has peaked and that the Fed is going to be encouraged by recent signals have been dead wrong. Every time we have a Fed speaker come out and say, we're not there yet, inflation's not coming down enough, we've got a lot more work to do, we're going to go higher, we're not even in restrictive yet, just sort of smacking down that idea that they're looking to pause anytime soon.
Sarah, that's right. I don't think the Fed is saying, we're going to get a great number and we're going to pause. But I think the Fed is now laying groundwork for 2 pretty big hikes into year end, and then the possibility of like taking a look around. And that's a huge change because if the Fed is potentially going to pause, it's not a pivot. It really changes how risk is positioned because investors wouldn't necessarily be short bonds, right? So interest rates don't necessarily have to keep going up. And in fact, I think a lot of bond managers are making that observation now. And if interest rates plateau or start to come down at a time when there's almost record short positioning in equities, there's record put buying, record gamma on equity, put buying for gamma on equities, investor sentiment is record negative, that's a huge positioning off sides if the Fed is pausing. So, Sarah, you're right. I mean, it's like a Chicken Little question, but I think that this past week has actually really been in the bulls' favor.